And I'm live. Okay. Give it a few seconds so other people can join us. Hey, what's up, guys? Hope you're well. Hope you're very good. Just thought I should go live today. It's been a while since I went live alone. And just answer some of the questions that I receive in my DMs. The questions that you guys have been sending me in my DMs, and the ones that I posted, as in the ones that I posted before, I'll be answering those questions today. So today is not going to be an interactive session with someone else. Rather, it'll be just me answering those questions, and then feel free to DM me as well again if you have any follow-up questions and if you have anything maybe that I didn't clarify properly. And then, Anyway, let's get started. The first question was, what must my credit score be to apply for a home loan? So there's no specific credit score to say that when you have a credit score of 500, you qualify for a home loan. It doesn't work like that. So every bank has their own assessment criteria, and then when you apply to the bank, they will assess your credit, and then they will see what type of credit person are you? Are you a good person or are you a bad person? And then that's something that also influences the interest rates that you'll be getting. So if you have a really good credit profile, you say you have a score of like 700, then you will likely to get a really good interest rate compared to someone who has a really bad credit record, right? So there is no number where I can say this is the number that you need to strive for you to get a bank loan, because every bank also, remember, they'll have their own criteria because they're different businesses, right? Always remember that the bank is a business and they're looking for your business. So they're in the business of giving you loans. So they'll try by all means to give you the loan. However, where do they make the money? The bank makes the money when they charge you interest. So this brings me on to the second point. They get money when they charge interest on the loans that they provide, right? So what you need to understand is that interest is they're likely going to put it as high as possible. So you need to be able to negotiate your interest. Negotiate the interest rate that you'll be getting from the bank on your home loan. It might be prime plus 2, prime plus 3, prime plus 4, or prime. Some people prime minus 1. Interest rates differ throughout, and you need to be able to negotiate your interest rates and compare interest rates from different banks. Don't just take the first interest rate that you get. So I'd always say use a bond originator so that you can make that one application, and then the bond originator will go around getting you the different quotes from the different banks, instead of you going to every single bank and getting a loan application there, because that's something that is going to negatively affect your credit score, right? So Prime Plus is basically the prime rate in South Africa, if I'm not mistaken, right now is 7%. So when the bank says Prime Plus, when I say Prime Plus, I basically mean they're going to give you 7% plus 3%. And that 3% is their payments for the risk that they're taking on you, depending on your credit record and all of that, right? So it might be prime, even though interest rates right now are 7%, but you might get a bond of 10% at 10%. And the reason for that would be it's because it's prime plus 3. And then when people are lucky, have a good credit record, or maybe they just bank with a good bank, for example, if you have a private banker, you'll have prime minus on your car loan. Sometimes even on your home loan, you'll have prime minus 1%, prime minus 0.5%. So that will also depend and differ for every individual. I hope I explained that and you understand it. Right, let me just get this sorted. Boom, for question number 2. Oh man, sorry about that. Okay, so question number 2 was, how do I get funding for my property business? Firstly, the thing you need to understand for wanting to start a property business, if you're asking me that question, the first thing is nobody's going to give you money because you probably don't know what you're doing. That's just the reality. There are people who are willing to fund business ideas and might be willing to fund you and your business or work with you, but you need to understand what you're doing. You need to have the education in property. Someone who's going to be giving you their money, they need to have an incentive for giving you their money. You can't just say, I'm going to buy a house and rent it out, please give me 500,000 rands. I'm not sure as hell I'm not giving you 500,000 rands if you ask me like that. The bank will. The bank is probably going to do it. But if you want individual investors to invest in you and your business, you need to really understand the business and understand property in general. How are you going to make money? How are you going to give the investor back their money? What is the area that you've invested in? What are the potential returns? And where are you getting those numbers from? You're not thumb sucking. You're not asking if you need to have actual facts and numbers that are with you to support whatever it is that you're saying. You can't just request funding. But there's a question to ask, how do I get it? Now, how do I get funding besides using the bank? So you can attend seminars, and at property seminars, there are people who are always looking for deals. Maybe they don't have the time, but they have the money. So you could partner with those people. It's all about networking, right? You network, talk to people, find out who has money, who does not money, who does what. And in those conversations that you're having, you'll find someone who has a lousy couple million lying around that they want to invest, but they don't have the time to invest it. So then you have a conversation with them and say, hey, I have a deal, and the deal looks like this. The property is in this area. The property rental is expected to be that. The return I'll give you is this. Like all the proper details of that, and make a proper pitch. And pitch them, actually make a proper pitch. Then there are other ways in which you can get into property without really using your own funds. The first one is also rent to buy, and an installment sale agreement. Basically, installment sale agreements are where you sign the agreement today to say that you are going to own the property in 5 years' time, and today you can take occupation of it and you'll pay a monthly rental to the owner. Right, and then what you do is when you take occupation, you put tenants inside, and the tenants pay off the rent that you need to give to the owner, and then at the end of 5 years, you need to pay whatever is outstanding from the amount that, let's say it was 500,000 rands, whatever the outstanding amount would be, that's the amount you need to pay. So that's just another method. If you're interested a bit more in this, there's a video that I posted on my YouTube channel. I think it's like 12 minutes long, just purely discussing lease option agreements as well. So you can so guys, I can see some of you are asking me questions in the comment section. I don't know if I'll get to your questions because I kind of did post on my status that ask me questions so I can answer them, and these are the questions that I'm answering today. So I might not get to your question, but you can DM me that question, and on my next live I'll respond to you via text as well. That's fine. Then someone asked, is it better to build or is it better to buy a property? There's advantages and disadvantages to both. I'm still going to make a video. I plan on making a video to discuss in more detail, but on a high level, what you need to understand is when you're building a property, you need to find the land. You're going to have a headache of managing builders and contractors and all of that. Just the stress as well of, are they building the house the way in which the architect had drawn up the plans? You'll just always naturally have those that stress. Are the finishes as nice as you wanted them to be? They'll just be that, and it is cheaper. It generally is cheaper to build than it is to buy a home, right? So then on the flip side, when you're buying a house, it's much stress-free. It's very stress-free. You just go around viewing a bunch of properties, and then at the end of the period, you choose a property and you buy it because you like it. The disadvantage here is that it slightly is a bit overpriced, not overpriced, slightly more pricey than building. Another thing is when you can't really design your dream home. Some people have the desire to design their dream home. I personally do not, because because I know absolutely nothing about designing. I just want to see it and like it and take it. So yeah, it's just going to depend on the type of person you are. But if you're looking for the cheaper option definitely is for you to build. And then where do we find, are property stock files worth the source they claim to drip? Okay, are property stock files worth the source that they claim to drip? I believe property stock files are for people who don't know what they are doing and want to get started in property. I don't think it's a bad thing. I think it is a good way to get started if you know nothing. However, you don't really learn much. You just contributing money on a monthly basis towards the stock file, and you get promised to be built a house, and then that's it. Like, you don't really learn anything. You're not involved in the process of building. You're not involved in the process of the offer to purchase. So that's why I say it's for people who don't know who don't know what they are doing. That's just the reality. If you know what you're doing, you're not gonna give your money to someone else to do something that you can do. So yeah, that's just my take on it. Feel free to actually hit me up in the comments. I'd like to hear what some of you guys think about property stock files. Then, is it possible to invest in property without any money? I think I kind of addressed that part, where you find potential investors who are going to invest with you. Another way is to do lease option agreements and installment sale agreements. Then there's also just other ways in which you can make money in property without necessarily investing in a property. This you can do by back-to-back deals. Here you don't actually own the property, but you flip the property, and you can be a real estate agent. You can do referrals, refer people to real estate agents who want to sell their property, who want to buy a property and take a percentage commission from that as well. There's many different ways in which you can actually just make money in property without actually owning a property. Right. And then if my rent is more than 12,000 Rand, is it better received in my personal account or my business account? So it depends how you're running your property portfolio. Are you running it in your name or are you running it in your business name? It makes no sense for you to run it in your personal name and then pay the money, the rent goes to your business account, or vice versa, where you're doing it in your business name and then the rent goes to your personal account. That just sounds a bit shady to me. Sounds like you're trying to avoid the tax man. But yeah, so it just depends how you've structured it. I always say, rather put your properties in a business name, because if it's in a business name, then it will get taxed less as compared to if it's in your personal name. The tax brackets, as you know, in South Africa go up to about 45%, and the tax brackets on a company is at 28%. So it's simple maths, right? And then, do you need to be debt-free to invest in property? You don't need to have zero debt, but obviously you can't be over-indebted. The bank is going to look at what is your affordability. Can you afford to pay this on a monthly basis? Even though you might earn 50,000 Rands a month, but if your expenses are 49,000 Rands a month, the bank is not going to give you a loan because you can't afford it. So it's all going to depend on your affordability. So if you do have a few debts here and there, it doesn't prevent you from purchasing a property. However, the bank will look at your affordability to say, your debts, are they too much or would it be manageable? Because they can't give you a loan knowing very well that you won't be able to repay the loan. That would just be reckless trading on their behalf, and they don't want to go through the process of repossessing the house. That is just too much effort. The bank is not in the business of repossessing houses. The bank is in the business of charging you interest on loans. So always remember that if you are actually someone who is financially struggling, speak to the bank. They'll always try to make a plan for you to make payments. And even in those payment structures that they make for you, it results in what their core business is about, which is earning interest on the loaned money, not repossessing your house and repossessing your car so that they can sell it off at an auction. That is not their business model, right? So next up, how do I pay back a loan quicker? And does it help paying extra every single month? So when you pay extra every single month, it does help. It helps because you're going to reduce the amount of interest that you'll be paying to the bank. If you purchase a house for 500,000 Rands, chances are by the end of 20 years, you would have actually paid the bank 1.1 million. So your house actually costs 500,000, and the interest alone that you paid on that loan of 500,000 was 600,000, totaling the 1.1 million. So when you make more payments, you're reducing that 600,000 portion to whatever it is. I don't know, I can't give you a number because it's going to depend on whatever your additional payments that you are making, so that you can pay back your loan quicker. There are many different ways to pay it back, to pay back your loan quicker, and the simplest is just take some of your savings and put it in there. Take some of your savings and put it in there. Don't just eat. Don't eat out every day. They save where you can save and whatever. Right. So someone here is saying, what if you get a fixed rate loan? The bank is not stupid, right? So the bank is not going to fix your loan at 7%. I know interest rates are very low right now, but the bank is not stupid. They know that the interest rate is going to go up. So when they fix your rate, they won't fix it at 7%. They'll probably fix it at like 9%. So you'll be losing out on the savings in the meantime. That's just my quick response. And then I want to buy my second property, but should I pay back my first home loan first? So I would say it depends why you want to get that second property. What is the reason of you getting that second property? Is it for investment purposes, or is it so that your family can live there? So I can't give you so let me just look at it from both sides quickly. If it's going to be for your family to live there, then okay, I wouldn't do it. I don't know whether you want to do it, but I wouldn't buy another house so that my family can live there, while I still live in a house where I have a first bond. But so definitely have a look at that. If it's for investment purposes, then why not? Like, really, why not? Get that second bond if you want to get it. If you can manage it and you can get tenants to pay back the bond, because that's the key thing. You can't be buying properties that are meant to be investment properties and on a monthly basis you're making a loss. That is going to mess with your affordability. It's going to fuck with your affordability, and you won't be able to afford certain property. You won't be able to afford that second property, a third property maybe. So always keep in mind that your affordability is something that is very important that the bank looks at when they are trying to give you a home loan. So I don't necessarily believe that you need to pay back your whole loan, your first loan, for you to get a second property. Debt is leverage. You're leveraging off other people's money. Some people don't like to have a debt attached to them, but that's because debt is historically something that has pulled us down as people. I'm not someone who's afraid of debt, because I know I can be responsible with my money and I know exactly what I'm doing with it. Even ask yourself the simple question of the billionaires are all around the world. All of them still have debts. They have millions and millions in debts. Why is that? That's because they're leveraging off other people's money so that they can make more money. So debt is not a bad thing. Debt is a tricky thing. If you don't know how to use it and you're using it to buy food and you're using it to buy clothes, then it's a bad thing because it's not generating you a return. But if you are taking out debt so that you can get a house that is going to pay itself off in the form of tenants, and you've done your proper due diligence on that, then it is a good debt, because it's not something that's going to mess with your affordability, and it's paying itself off. You're not paying it off. The tenant is paying it off, right? So is it the right time to buy a property? That's the first question. And what happens if the Reserve Bank adjusts the prime rate? So right now, I think it is a good time to purchase property. There are a lot of deals that are running around. The reality is, whenever there's a crisis, there is opportunity. This may be unfortunate. Some people may say I'm a bit heartless for saying this, but it's the truth. It really is the truth. Whenever there's a crisis, things are going wrong in the country and in the economy, in the world economy, there's a lot of opportunity. The most millionaires all around the world historically have been made whenever there's a recession. And this is a deep recession that we're in. This is the best opportunity for people to take advantage of those opportunities and get and negotiate hard on property. Get as low price as possible. A price, just because a property is worth 800,000, that does not mean you need to purchase it for 800,000. You can purchase it for 500,000, 600,000. You need to be strong and brave enough to make that low offer. Make the offer that is embarrassingly low and rather get rejected and walk away. But if that owner is motivated enough, they will sell their property. That I can guarantee you. So, is it the right time to buy a property? It is a good time because this is a crisis panic mode. People are selling their properties because some people just can't afford it. So this is a good opportunity for you to come in, make a low offer, and benefit from the low interest rates that we are experiencing right now. It's not going to happen forever. That it's not going to be around forever, but you can definitely capitalize on it right now. And then in the next few years, the interest rates will slowly start to probably increase. And I would say if you are purchasing a property, especially if you're going to live in it, don't purchase a property at the maximum amount that the bank is saying you qualify for. The bank is going to say you qualify for R1,000,000. That does not mean that you must go buy a property worth R1,000,000. It does not mean that you must buy a property for 950,000 rands. Try get it a bit lower so that your repayments can be lower, and then you can make those extra payments on the loan. And then as soon as interest rates start to normalize again and increase, what that will do, it will increase the monthly payments you are making as well. So when your monthly payments start to increase, it won't strain you as much. Because if you can only afford 6,000 rands to pay back your loan, and then interest rate starts to increase, and it makes your repayment 6.5 and then 7,000 rands, do you see that you're now going to be in trouble? You won't be able to afford, even though maybe you bought the property 3 years ago and you could have afforded it when rates were 7%, but now they're 10% and you can't afford it anymore. So don't purchase property at the maximum amount in which the bank is saying you qualify for, unless it is for investment purposes. Then you can do that because you have already calculated what the income is going to be and what the expenses are going to be. The income being the rental income from the tenants. When I say tenants, hopefully it's plural, tenants. And the expenses being the bond, the levies, the rates and taxes, the fictitious costs as well, such as repairs and maintenance. As much as that's not a cost immediately, but that's a cost you need to account for on a monthly basis from your rental income, and keep it aside because you're going to need to repaint the house. You're going to need to maintain and keep it in a condition that tenants will want to live there. And then lastly, the cost that I believe you need to always include is cost of having vacancy, the vacancy cost. This is where your tenant moves out and your property is vacant. In the month in which your property is vacant, you can't in the month in which your property is vacant, you won't be earning an income. So you don't want to put yourself in a position where you're unable to now pay for that month, or you're struggling to pay that month. So rather keep some money aside as well from the rental income that will assist you to pay for months in which you don't have tenants, because you're not going to be fully occupant 100% of the time. There will be times where you just don't have a tenant. Right. So let me go through some of your questions then. What is the highest prime interest rate? Well, there's only one prime interest rate in South Africa. It's 7%, and yeah, there's no highest. I don't know. I'm not sure if I understand your question. Let's talk refinancing on a paid-up home with a tenant in it to pay off temporary debt. So I'm not sure, Box Fresh Reloaded, what you mean by that there's a tenant in it to pay back temporary debt. What is this temporary debt? Is the home paid up, or does it still have debt? Or are you saying that the tenant is paying off your other debts? So if you want to refinance that property, the bank, I'm sure, would be more than willing to do that. You just need to approach your bank and your banker and speak to them and tell them that, hey, I have a home that's fully financed. I want to take out a loan against the home. So the bank that is basically their collateral. So they would give you the money that you want, depending on the value of the property, right? And then let me scroll up and see. What if you get a fixed interest rate? I think I addressed that banks aren't stupid. They're really not just going to give you a fixed interest rate at prime, that is. So another question is, can you please explain what is flipping properties? Flipping properties is when you buy it and when you sell it for a profit. Simple as that. So I buy a property for 500,000 rands. I fix it for 50,000 rands, and then I sell it for 650,000 rand. Some cases, someone will buy a property for 300,000 rands, put in 300,000 rands to fix it and upgrade it, and then sell it for R1,000,000. That is flipping property. That's you just simply buying it at a low price, you fix it up, and then you sell it for a profit. One thing to note about flipping property is that there's a lot of tax implications that are there. If you're a property flipper, there are a lot of tax implications that would be there when you're flipping property. So just make sure that you speak to a tax practitioner to assist you with that. And then, so let's see if there's any other questions. Please explain fixed and prime interest rates. So prime interest rates is when the interest rate fluctuates based on what the Reserve Bank is basically saying to the country. So it fluctuates, and then the banks also adjust. The interest rate goes up and down. Like recently it's been going down. That's a prime rate. And then a fixed rate is just simply you say to the bank, I want a fixed rate on my home loan, and then they'll fix your interest rates for at 10% for the next 20 years. And then are gated estates on a 99-year plan? I can't speak for all gated communities. I'm not really sure, but I do know that Waterfall is on a 99-year lease, if I'm not mistaken. I heard you last time talking about investments. Okay, that's not a question. But yeah, anyway, guys, that's it for me today. I was just answering some of your questions. I hope this was helpful. And definitely send me a DM if you do have any more questions. I'll be done for today, and enjoy the rest of your evening. Good night.